Hello, everybody. Adam Parks here with another episode of Receivables Roundtable. Today, I'm here with my old friend, Mr. Neil Gonsalvez, who is with AARC-360. I've had the opportunity to meet with Neil on a couple of different occasions at conferences, and originally meeting him at an ACA conference, I want to say about 7 or 8 years ago. And I've had the opportunity to work with him on several audits. He's actually my kind of preferred auditor when it comes to myself or my clients going through data security audits. How you doing today, Neil?
Hey, wonderful, Adam. Thanks so much for having me on the Roundtable conference out here. So appreciate you bringing me in.
Absolutely. For those that are not familiar with you, can you tell us a little bit about yourself and how you got to the seat that you're in today?
Sure, absolutely. So I'm the founder and CEO of AARC-360. As a firm, we specialize in IT compliance and cyber risk management, making it attainable for small to mid-sized companies. Mm-hmm. Our main focus areas are 4 pillars that we call assurance, advisory, risk, and compliance. Under the assurance bucket, anything that has an audit connotation, that's what we focus on. We'll talk a little bit about some of them through the rest of the webcast. Secondly is on the advisory front. If ever you are planning on going in for any of these compliance initiatives, we help you to get ready, perform gap analysis. Next is our risk service line, wherein we focus on IT security risk, perform things like vulnerability assessments, penetration testing. And then lastly, under the compliance bucket, if there is anything that has a regulatory connotation, whether it be Hipaa or GDPR or Gramm-Leach-Bliley, we help companies comply with those regulations as well. So in a nutshell, that's pretty much what we do.
I was saying your personal background, like you're a CPA, aren't you?
Absolutely, yeah. So I'm a CPA as well as a certified information systems auditor. And then also have a couple of other designations. We are also a PCI QSA firm, so I'm a QSA as well. And then we are also a high trust common security framework assessor, and I'm a high trust CCSFP as well. A little bit about how I got here. So I pretty much spent a majority of my early life with a Big Four accounting firm, EY, initially on the financial audit side, and then later on had the opportunity to start the IT audit practice for EY when I was in India. Through that relationship, had an opportunity to come out here to the US and then work primarily in the SAS 70 practice, but also help a lot of audit support work wherein we work closely with the financial audit team. I moved away from EY in 2010, and then in 2014 started AARC-360. And pretty much have been doing, exactly the same thing that I did for the longest time. Really loving every bit of it. Have got a great team of individuals that I've been fortunate to work with. And so anyway, I hope, through this webcast, I can add some value to your audience and give them, demystify some of the things that, are probably questions on their mind.
Well, you're one of the first people I go to for questions in the cybersecurity space, or when I need someone to come in and take a look at our system. So I'm sure that I'm going to learn as much as the audience again today. I think starting kind of with a simple piece here, or a more simple piece, I guess you could say. SOC I versus SOC II, right? Like a lot of this terminology just gets thrown around in conferences or in the industry, RFIs, audits, et cetera. But can you help the audience understand kind of what the real separation is between a SOC I versus a SOC II audit?
Absolutely. So first and foremost, both of these, whether it's the SOC I or the SOC II, are attestation standards under the American Institute of Certified Public Accountants, so the AICPA. The broad standard is called SSAE 18. It's the Statement of Standards on Attestation Engagements. Mm-hmm. And SOC I and SOC II are 2 flavors under SSAE 18. There are other flavors as well that wrap under SSAE 18, but for the purposes of this conversation, let's focus on your question with respect to the SOC I and the SOC II. So the SOC I comes into play wherein a company that is a service organization impacts the internal controls over financial reporting of its customers. Okay, let me just break that down with a simple example. I like to understand things with an example. I like to explain things with an example. So let's take the case of a payroll processor. A company such as ADP or Ceridian or Paychex or any one of those payroll processing companies. The work that they do on behalf of their clients directly impacts their clients' financial statements, correct? Whether it be with respect to the payroll processing, so the payroll expense number that is on the income and expenditure account, or the payroll tax number that is on the income and expenditure account, or from a balance sheet perspective, whether it is the withholding taxes, the Social Security, Medicare, FICA, FUTA, whatever the case might be. So you can see wherein a company such as Ceridian or Paychex directly impacts its customers' financial statements. In that scenario, a company such as a payroll processor would need to avail of a SOC I report, wherein it is a report on the controls at that payroll processor that can then be given to its clients to say that they are doing everything right from the payroll processing perspective. Another example which you are very close to is, the collection industry. So if your clients are in the business of third-party collections, where the debt is not on their books, but is on the books of their clients, any monies that they collect on behalf of their clients that they pay back to their customers, ultimately impacts the customers' financial statements and their balance sheet, right? If they had written off that debt or had provided for it. So you can see wherein a company such as a collection agency would impact its customers' financial statements to the extent it's third-party collections. So that's another case wherein a collection agency might want to avail of a SOC I report that impacts its customers' financial statements. Let me now just move over to the SOC II as well. The SOC II essentially is a slightly broader bucket. So it's everything else other than financial reporting. Okay, so that's the definition. But the AICPA has put some good definition around that, has not left it completely open-ended. So most SOC II reports are based on what is called the AICPA Trust Services criteria. There are 5 categories that are listed under the SOC II framework, under the AICPA Trust Services criteria. It starts off with information security, or what they call common criteria, as being the backbone. And then you have 4 incremental categories focused on availability, processing integrity, confidentiality, and privacy. So again, another simple example. So let's say that there's a company that provides co-location services, a data center, correct? For them, it would be a stretch to say that they impact the internal controls over financial reporting of their customers. There could be, the data center doesn't know whether there's a financially significant application in their data center or whether it's a healthcare application, right? They are just providing pipe and power, pure hosting services. So for them, the security of that information is paramount, as well as the availability of their data center so that the customers can connect to their location, right? If that center is, burned to the ground, it really doesn't mean anything. So a data center might choose to report on security and availability. Okay, it does not have to report on all the 5 categories. As I said, security is the backbone, so you typically would not find a SOC II report without security. But from the other 4 categories, you can pick and choose which ones would be most applicable. And we can go into a lot more detail, but the point is that I just wanted to clarify: SOC I, internal controls over financial reporting; SOC II, everything else, based on those 5 categories. There are other areas as well, but for the purposes of this call, let's focus on those. And you as a company, like I said, you've got to decide on what's most appropriate for you. In some cases, there might be some companies that would need to do both a SOC I and a SOC II. Take the example of a managed services provider, that goes a little bit beyond just, taking care of the infrastructure. They get into a little bit of application type of work. So they might need to comply both with a SOC I and a SOC II, because they might take care of a healthcare application on one side. On the other side, they might take care of a financially significant application like SAP or Oracle or something to that effect. So you can see wherein a managed service provider might need to comply with both. So anyway, let me pause for a moment and see whether that kind of made sense to you and hopefully to your audience as well. Or do you have any questions that I can?
Yeah, I think as I think through kind of the way that you presented that, the SOC 1 is financial services, the SOC 2 is everything but the kind of accounting mechanisms. So you may need both depending on what your business structure is and the services that you're providing to the end user. Actually, I think with the examples, it makes a lot more sense to me in terms of that's probably the best explanation I've heard of the differentiation there. But let me throw one more curveball into kind of the discussion here. Help me to understand where the separation between kind of the SOC 1 and SOC 2 and the PCI audit is concerned, and where you guys are kind of a certified PCI auditor. I figure that's a good question to kind of get a better understanding of how these three things line up together.
Correct, absolutely. So the PCI data security standards have been put up by what is called the PCI Council, the Payment Card Industry Council, and they are comprised, they were formed by the major card brands, American Express, Discover, Master, Visa, and JBL. So, but they came up with a framework primarily focused on credit card data, what they call, cardholder data. That's pretty much the focus of that assessment. So it comes into play if for any particular reason a company stores, processes, or transmits credit card information. Okay, that is the key. So your audience should ask the question, if they get asked to comply with the PCI DSS assessment, the first question they should ask themselves is that, do they store, process, or transmit credit card information in whatever form? So again, back to an example that your audience, if they are collection agencies, might be able to relate to, is if they are accepting credit card payments over the phone, there could be multiple ways in which they do it. They could either enter it directly onto their systems, they might connect with the payment processor and might swivel onto the payment processor's portal to enter that credit card information where nothing comes into their environment. So it's very important to understand not only whether you store, process, or transmit credit card information, but how it is done. And based on the mechanisms that you use, you can actually limit the scope of your engagement to being only what you are responsible for, right? So for example, if a company uses a virtual terminal, then it's the payment processor whose application they are using would be responsible for the bulk of the PCI DSS requirements. And then the collection agency would be limited for a much smaller subset of the overall requirements. So it's very important to make sure that that piece is done really upfront, so you can scope the engagement to be exactly what the company that you're auditing is responsible for doing. And then the other aspects of it would be responsible for whoever is working along with them. The vendors that are working along with them, they would be responsible for those areas of compliance. So there is a distinction between PCI and the SOC 1 and the SOC 2. The SOC 1 and SOC 2 can apply to a broad range of data, a broad range of industries, but the PCI comes into play very specifically wherein there's credit card data. Now, at times, some companies say, well, we want you to adopt the PCI framework, even if you do not comply with even if you do not store, process, or transmit credit card information, right? So then at that point in time, what they are doing is they are just using the PCI DSS framework as a structure for them to comply with certain requirements. And some companies do that, but that's kind of pretty rare because the PCI framework is very prescriptive and it's pretty robust. So if a company wants to embark on that route, they've really got to be certain that they want to put all those controls in place, because like I said, it's very prescriptive and it's very, very stringent for the simple reason that there is sensitive data to be protected, and very rightly so.
Well, as we talk about sensitive data, how does the kind of the SOC audits and the PCI audits compare to the requirements under Hipaa? Like, are there a lot of similarities between all of these standards, or is there a graduating curve as to the level of difficulty that each one of these entails?
Yeah, so that's another great question, Adam. So let me just explain Hipaa. Hipaa comes into play wherein a company comes into contact with any kind of protected health information, right? So again, back to a significant chunk of your audience who are collection agencies or debt buyers. If they are working with healthcare debt, then in that case they might become privy to some protected health information, correct? So in that case, they would be required as a business associate to comply with the Hipaa security rule regulation. And there is the Hipaa security and privacy rule. Typically, business associates are more on the hook for the security rules, so long as they are not the first point of collection of that protected health information. Now, amongst all these frameworks that we just discussed today, whether it's a SOC I, SOC II, PCI, or Hipaa, there is definitely some commonality. Some of the basic block and tackle security controls would apply to all of these frameworks. But there are certain nuances that each of these frameworks would kind of focus on. To give you an example, in the case of Hipaa, there are certain additional requirements around breach notification. So in the event that there is an unfortunate event that a company does get breached and their protected health information is stolen, then there are certain requirements that you have to notify certain authorities as well as the individuals whose information has been breached. So those are not covered under the PCI as well as the SOC 1 or the SOC 2. So that breach notification is very unique only to Hipaa. On the PCI front, like I said, there are certain requirements around the use of encryption technology that is very specific to PCI. That is not really mandated by some of the other frameworks. So you can largely see there is a lot of commonality, but there are some nuances to each of these. And for companies that we work with, typically what we do is we take the most robust framework and then build the others on top of that. So in our world, typically if a company wants to do a PCI assessment as well as a SOC 2, we take the PCI as a base and then only focus on what's incremental for the SOC 2, which tends to be a much smaller component. But
Okay.
But basically, you can kill two birds with one stone for most part.
Understood. It's an organizational process here, but there is somewhat of a hierarchy. So you would start with that PCI audit and then build on the SOC 2 and kind of work from that perspective, which I think is important. Now, one of the things that I know that we go through as we go through these audits is penetration testing. So can we talk a little bit about what that actually means? Like I've done some both physical and digital penetration work back when I was still in the compliance world. And I'm curious to hear kind of maybe how you guys have approached that and what it really means in terms of testing the limitations of an organization's technology or even from a social engineering standpoint. How does that all come together?
So the penetration testing comes into absolutely. So the penetration test in some cases is a mandatory requirement. So the PCI DSS framework requires a penetration test to be done once annually. So if you need to comply with the PCI DSS standards, then you have to do a penetration test. There's no way out of it. But for a company that does not have any PCI DSS requirements, it is definitely a very prudent approach to do some sort of a vulnerability assessment and a penetration test. The way I would kind of distinguish the two is a vulnerability assessment is more just scanning the surface to see kind of what is out there, if there is some low-hanging fruit that is vulnerable to a bad actor or and a hacker who's out there trying to poke around and see what they have. And the penetration test is kind of getting one step deeper, is once I have identified that there are possible vulnerabilities, can I actually exploit those vulnerabilities and get into your system, and can I cause any damage, correct? So companies would want to do something like this, at least on an annual basis, if not more often, to basically, just block and tackle, correct? I think it's simple blocking and tackling to plug some of those loopholes that could possibly be there. So, you might as well you find it as opposed to a bad actor finding it, because at that point in time, it gets too late, right? So while a vulnerability assessment and a penetration test can never guarantee that it will, prevent any possible attacks from happening, but it is definitely something that all companies, whether it's large or small, should consider doing as some basic blocking and tackling to help their information security posture.
I agree. I think regardless of how good your IT team is or how experienced they are, there's always new vulnerabilities coming out, and some of these testing tools are running technology or taking approaches or conducting attacks or mock attacks, however you want to put it, that are new. And staying out in front of those problems is, kind of a major issue. Now, beyond even kind of the penetration testing, one of the things that I've seen over the past, I don't know, probably year, is that a lot of organizations from an RFI standpoint, meaning banks, finance companies that are looking to sell their debt as a debt buyer, when I'm going through, or as an agency going through their RFI process, I'm starting to see more organizations that are basically saying, if you have a SOC 2 certificate, or if you have a SOC 2 audit report that you can provide to us, then you don't need to answer these 100 questions. If you have a PCI audit in place, then you don't have to go through these 75 questions, which is literally saving me a lot of time in terms of completing RFIs. Are you seeing the same thing from your side? Or are you hearing the same thing from your clients? I'm curious.
Absolutely. Every day, we get calls every day from our clients where they are in an RFP situation. And one of the requirements is, you either tell us your security posture, or if you have a SOC 2, we would accept that, correct? So spot on, that's one significant hurdle that they can cross in terms of responding to an RFP and kind of, getting them at the front of the table, so to speak. But also another important point is, your clients who you're already doing business with, right? Many times they send you these lengthy security information gathering questionnaires, which is a 40, 50 page questionnaire, which it'll take 3 or 4 days for your IT team to respond to that appropriately. And each company has its own flavor of that security information gathering questionnaire. So rather than take care of your IT systems, your IT team is more, answering these security information gathering questionnaires. If you have the SOC 2, many times your clients will accept that in lieu of you completing that security information gathering questionnaire. So there's lots of benefits, that it can provide. But again, I think besides those things, it also adds a lot of value in terms of helping keep the company safer, correct? That is, one of my clients tells me, Neil, I don't do the SOC 2, as a compliance initiative. I do it to keep my organization secure, and everything else will fall into place, correct? If I approach it from that standpoint, and that really is the right way to look at these compliance initiatives, is to do it for the good of the organization. And then some of the other things you spoke about, like answering to the RFP, or whether it is a security information gathering questionnaire, these are other benefits that can significantly help you, run your shop more efficiently, more effectively, but more importantly, in a secure manner.
Wow, Neil, I can say that every conversation I have with you, I learn so much information. So I really appreciate you taking the time to come on and kind of chat with myself and the audience today about really all of these different types of security audits and what the future may hold. Any insight on kind of what the future may hold in terms of security audits? Are we seeing any major changes coming down, or is it more organizations trying to get to the current standards?
No, I think the key thing that we are seeing is a big focus on cybersecurity, right? That is the major focus going forward. And like I said earlier, you might be a small company, in the middle of the Midwest, but you are not immune to that. Just because you are in a little bitty town, don't think that you are immune to it, because the bad actors are not looking specifically for you. They are just looking for wherever they can find low-hanging fruit, correct? It's a kid sitting in a garage somewhere who is, hacking his way through. And if he finds a door open, that's what he's going to go after. So I think that's a big trend that we are seeing and more importantly, even board of directors, audit committees are focused on this, and I think CIOs, CTOs, this is where their pain point is, as well as, company CEOs at the end of the day, right? So definitely the cybersecurity audits are something that we are continuing to see more traction on. And hopefully the areas that we spoke about today are one step in that direction. Keep in mind, again, there are just a ton of compliance initiatives. You don't have to comply with all. The basic thing that I would leave your audience with is, try to determine what's most appropriate in your scenario. What do you believe, your risks are, and how you can address those risks to ultimately serve your clients better, correct? And if there's anything that you need to consult on, we are always there. Hopefully we have the good fortune of helping some of your audience with any of their compliance initiatives. Yeah, I think that would be the focus area. Is cybersecurity assessments would be something that would be key going forward.
Well, your knowledge has always been valuable to me from the perspective of going through these audits. And, I've enjoyed the opportunity to work with you and your team. And, every time that we're going through one of these audits, obviously it's a learning process. I feel like there's new information or new approaches or new things that we need to consider as an organization. So I really can't thank you enough for, for the time that your team puts into the audits that I'm participating in. So for those of you that are watching, if you have any questions or comments about, kind of all the different things that we discussed today, feel free to leave comments below. Both Neil and I will be responding to comments on LinkedIn and YouTube as they come across. If you have any additional guests that you'd like to see me interview, or topics that you'd like to see us cover, or more questions that you'd like to see me ask Neil, because he is a wealth of information for us all, feel free to leave those in the comments as well, and we will make the appropriate arrangements. But Neil, thank you again so much for taking the time to participate with me today. This was definitely an educational session for me, and I always enjoy an opportunity to learn from you.
Thank you so much, Adam. I appreciate the opportunity to be here as well.
Awesome. Well, hopefully I'll see you at a conference again soon and we can sit down and have a drink.
Absolutely.
But until then, I will talk to you soon, Neil. Thanks so much.
Yeah. Take care, Adam.
All right.